Hey everyone, welcome back to the channel. Hope you all are doing great. In this video, I want to go over my portfolio and give you guys an update. I know it's been a while since you guys got an update on my portfolio and also the trades that I've been making. But just looking based off of the Robinhood portfolio here, you guys can see that there's been some drastic changes to my holdings. And in this video, we're going to go over all the stocks that I've purchased, the stocks that I've sold, and what my strategy and game plan will be for the coming future, as well as the short term. So before I get in the video, just want to ask you guys if you enjoy stock market investing and videos about investing and finance in general, please like and subscribe to my channel, as I will be coming out with more videos similar to this. And without further ado, let's get right into the video. So you guys can see that my portfolio has been trimmed pretty greatly in terms of the number of stocks that I own. And looking at the first stock here on the list, you guys can see that Tesla is one of my newer holdings. I did purchase Tesla in the dip that we had in, I believe, April or May, which I had purchased for around $767. And it was a big mistake to sell it. I wish I had purchased more. But hindsight 2020, you learn from your mistakes, and there's a lot of things that have changed fundamentally for this company and kind of opened my eyes. And I can see why this company has so much potential in the future. Jumping right into Tesla, we can see that I have an average cost of about $440, and I have 220 shares currently. And if you guys have been following the stock market and Tesla in particular, you know that Tesla had a pretty bad day, very red day today in the market. And I believe this was mostly due to people selling from fear. Recently, one of the biggest holdings of Tesla stock sold out some of his position, and people were just freaking out from this and selling out, and we had a pretty substantial red day. We lost about, in total, we lost about 14%, almost a little bit more than 14% actually, in today's trading. But you guys can see that Tesla slowly creeped back up and kind of leveled around the 440-ish price, and had kind of a odd spike here after hours, jumping all the way up to 473 and then coming back down into the 440s, and also another spike here close to 460. But I did end up purchasing some stock of Tesla, not only today, but pre-split. So if you guys aren't aware, Tesla had a 5-to-1 stock split. And right now, the stock is trading at the post-split price. And I had purchased some pre-split and ended up purchasing some more here in the red day. And you guys can see I purchased about 10 shares at $407, which was one of the lowest prices that Tesla hit during this dip here, which was but anyways, that's now carrying 80% of my portfolio, which I pretty much went all in to Tesla. And the reason for that is before I was investing in dividend stocks and also growth stocks, but mostly I was invested in safe blue chip dividend stocks. And as someone who's younger and has a lot more years of investing, I wanted to invest in a growth stock that has huge upside potential. And going back to my portfolio, you can see that I still have Apple, and MFA was another stock that I also own. Wells Fargo, I am kind of bag holding at the time, and also American Airlines, and recently got into Workhorse, and I have 200 shares of Workhorse. But my point is that I want to have huge potential for growth, and with investing into stocks like AT&T, Johnson & Johnson, and some of the well-known dividend stocks, there isn't huge upside potential. And just to state my case, we can go to AT&T for example here. So jumping into AT&T, you can see, looking at the 3-month chart, it has been pretty sideways. There hasn't been much growth. AT&T is a pretty established telecommunication company, and really, unless they are purchasing some other companies that have huge potential to offer some other services or products, I don't see AT&T growing substantially in the future. And looking at the 5-year, you can see it's actually down about 10%. And for the most part, it's been a really sideways chart for AT&T for the stock price in the past 5 years. That's just something I'm not looking for. I know AT&T pays a pretty nice 7% dividend, but 7% in a year is not much, and you can easily make 7% in cash secure puts in just a month with some of these other companies and their stocks. And if you guys don't know about cash secure put and what that is, I'm going to be making a video about doing cash secure puts or selling options, and I'll keep you guys posted on that. But just subscribe to my channel if that's something that you guys have heard of or are interested in terms of making a side income. So that's my main reason why I kind of swayed away from dividend stocks and have jumped into more growth stocks such as Tesla and Apple. Speaking of Apple, you can see that Apple is another holding that I have, and I've purchased quite a few shares. And I purchased most of my Apple shares pre-split, and I had a cost basis of close to $400. And you can see that post-split I have a cost of about $108.91, and also have 100 shares of Apple. And just to go over why I purchased 100 shares and looking at my portfolio, you can see that pretty much I purchase, for the most part, stocks in 100 share increments. And the reason for that is with 100 shares, you can sell covered calls. And what I love about this strategy is you can hold on to the stock that you want to hold for the long term, but not only that, is you can sell covered calls or options to other traders and investors and people in the stock market. And with selling options and selling covered calls in particular, you can make a decent side income while you're holding on to the shares. But say if I was holding about 40 or 50 shares or even 80 shares of Apple, I wouldn't be able to do that. But with owning 100 shares, which is what each option contract consists of, then I can sell covered calls, which is in my eyes a fantastic strategy to earn reoccurring income with the premium that you earn for selling these options. And like I said, I'm gonna make a video on that as well, also about the cash secured puts that I was talking about earlier. So going back to my portfolio, I still own 1,000 shares of MFA that I had purchased a few weeks ago. I still have 100 shares of Wells Fargo, and I'm holding that as well for the time being. My cost basis is $29.50, so I'm at a $489 loss currently with the stock price at $24.61. So I'm just going to hold on to my Wells Fargo shares and see if we can slowly get a increase in the share price with everything getting better with the whole pandemic and the situation around the world. And then we have 100 shares of American Airlines, also down on American Airlines. I have a cost basis of about $16, but with the premium I've been earning, my cost basis is actually below $15. So I've been selling some covered calls with American Airlines, and I currently have one that I sold at the $15 strike price with a expiration of this Friday, September 4th, and actually earned $10 with this, and now that contract is worth $5, but I think I'm just going to hold this until it expires this Friday and earn my full premium with that. A couple weeks ago, I actually had done a cash secure put on Workhorse, and with Workhorse, you can see that my cost basis is about $15.50. I own 200 shares, and I'm actually up about 22%, or $682. And I think Workhorse is one of those companies that also has huge upside potential. They are a new company also in the EV market, and they're building logistic and delivery electric vans, and they are in talks with the USPS to pretty much manufacture these electric vans for the US Post Office. And if this contract goes through, this will be a huge game changer for this company. It's kind of been a company that's been not talked about much in previous years, and you can see by the stock price it's been pretty sideways, and the hype really started back in June when they were getting a lot of attention, and the stock price pretty much just skyrocketed. And just in the past 3 months, you can see that it's gained 572%, which is pretty massive. I have one cover call on Workhorse at the $22.50 strike, and I earned about $30 in premium. Right now that contract is worth 13 cents or $13, since each contract is for 100 shares. And the reason for the decrease in the option premium here for this contract is Workhorse fell substantially today, as did with some of the other tech companies. And the other covered call was for a strike of $18, which expires September 11th. And I earned about $110 in premium for that. The contract is worth more right now, so I'm actually at a loss, but I'm gonna just hold this till expiration, and I won't be losing anything since I earned my premium. And with the stock price currently at close to $19, there's a pretty high probability that I'm gonna be forced to sell my Workhorse, or at least 100 shares of my Workhorse stock at $18 per share. So I'd still be making profit, and with the $110 I earned in premium also adds to the gains as well. But anyways, that's all I wanted to talk about for the most part. Those are all my holdings right now, and as soon as Wells Fargo and American Airlines gets close to my cost, I'm looking to get out of those positions and maybe put some of the capital that I sell those shares for into either Apple or Tesla, which are my biggest holdings currently. And the reason why I'm so bullish on Tesla is they have their battery day coming up, and there's talks that the batteries would have 50% more density, and they're talking about the million-mile battery, and there's just so many good news coming out for Tesla. And on top of that, Tesla has been consistently for the past 3 or 4 quarters making profits, and they're also raising $500 billion in capital by selling stock. With this news, a lot of people were thinking that it was bad news and selling out, and it also does dilute the stocks. There's some dilution that comes with this capital raising and selling additional stocks in the market, which I believe is about 1%. So it's not much, but with this capital, Tesla is able to expand and cover some of their costs to create some of the gigafactories that they will be building. They are also kind of hinting at a S&P 500 inclusion. And I think with all of these great news that are coming out for Tesla, we can easily see Tesla hitting a much higher share price in the coming month. So they have their battery day on September 22nd, and I have a good feeling that with this $500 billion stock sale to raise capital, and with these consecutive quarters of profit, that the news for Tesla to be included in the S&P 500 should be coming out pretty soon. My guess is somewhere close to battery day, if not before then. And if they are able to pretty much be included in the S&P 500, which is very likely, and with battery day, which a lot of people and investors and Tesla fans are expecting, we should see Tesla easily getting into the mid 500s, if not close to 600. And if you were purchasing Tesla stock today, September 2nd, on this nice red day that we had, then I think you got in at a good price, because recently Tesla has been just going up and up, and pretty much since the news of the stock split back in August, Tesla has been consistently making new highs and just increasing in value. So it was nice to see a red day today, so that some of us investors can get in at a discounted stock price. But anyways, that's all I had for you guys today. Just wanted to give you guys an update on my portfolio and what I've been up to. Hopefully I'll be making more videos consistently and more often. So please subscribe to the channel and like this video if you did enjoy it. And I will see you guys all in the next video. Take care.